growing trust in the industry is very important, because again, this is people's money we're talking about here, so they need to trust that what they're putting it into is going to be a safe space for them. There is a lot to be done in that respect to grow the market. The benefit for an actual portfolio manager or a dealer or a risk manager is that all of the information and the data related to securities, risk, analytics, portfolios themselves, it's all in one place. And then you can build it up because it's a technology that manages trillions of dollars globally already. So the platform can handle a tremendous amount of scale.
Yeah, but you do know, and you mentioned the other asset management companies earlier, the top 5 actually control 60% of all AUM.
Yeah.
How are you going to change that?
Firstly, the big, let's say, vision for us is to grow the market. I think that's the big picture view, which is that this market has the potential to be 2 to 3x in the next 5 years, right? So for us, it's really about helping to grow the market and then capture share of that growth. So that's how we see it. It's not about necessarily about market share from existing players. It's about the new flow. And there is so much room for this market to grow.
So a tech-forward, low-cost disruptor. Do you see yourself as that? Hi everyone, welcome to Thrive by Groww. I'm Radhika Bajaj. Today we are speaking with someone who has shaped how billions, or should I say trillions of dollars are managed across the world. He is now bringing that expertise to India's fast-growing investing ecosystem. Our guest is Sid Swaminathan, CEO of Jio BlackRock Asset Management. Now, before taking the helm here, Sid was actually heading index equities globally for BlackRock. And in this role, he was overseeing the management of over $1.25 trillion being invested in different parts of the world in different shapes and sizes. Now, you will agree with me that not many people in the world have managed money at that scale, and even fewer are bringing that kind of expertise, that knowledge, those learnings into a market as unique and as dynamic as India. So it is my pleasure to welcome to Groww Sid Swaminathan. Sid, welcome to Thrive by Groww.
Thank you for having me. Happy to be here.
We're so glad to be speaking to you, and I think I want to start off by looking at your own experience. Now, you've managed massive AUMs at Index Equities, and I want to understand, when you look at that and then you look at the Indian market, how does it compare?
Yeah, look, I think firstly, every market's different and it's got its own nuances. So that's one of the, I guess, beauties of international investing. I've had exposure to a lot of different markets in my career. Although I was based in London, I was still managing global portfolios, first in fixed income and then in equities. So a fair bit of experience. And I think when it comes to just looking at where the market is right now, it's at a very exciting space for all of us, which is one of the reasons why I relocated to come back here to be a part of this, right? I think there's so many kind of things that are going in favor. Firstly, if you think about the macro trends about the country itself, how the GDP is projected to grow, there's growth, there's productivity, demographics are really in the favor of the country as well. So there's a lot of, let's say, macro tailwinds happening. And then on top of that, there's a lot of stuff happening at a micro level as well, which is people's participation in financial markets increasing, which is super impressive to see. And this is, from a global perspective, this is still starting from a low base, right? So, and that means that the potential for growth from here on, when you combine the two, is phenomenal. So I think that is one of the very, let's say, interesting dynamics that we see playing out here. Which, from a personal perspective, I'm very happy to be here and be a part of it and help, grow that industry. But also, I think a lot of other players are looking at it from that same lens. Yeah. Global players are looking at it from the same lens as well. So yes, very unique at this point in time and with very, very high potential.
Yeah, absolutely. There's a huge opportunity here. But then the challenge, would you see it as the mindset still being traditional when it comes to investing? Because we see Indian household savings still going towards FDs in banks even now.
Yeah.
So is that going to be a challenge, or how are you looking at sort of tackling that?
Yeah, you could call it a challenge or an opportunity.
Yeah.
I'd like to call it an opportunity. Again, like I say, the fact that we are starting from a lower base gives us a lot more opportunities for growth. The positive is that we are seeing the trends are in the right direction. So yes, as you say, there is still much more of a saver's mindset. But more and more people are starting to switch from that to more of an investor's mindset. And we can see that in the numbers, just in the number of, just look at this industry on its own. So mutual fund investors, I heard last week, we've crossed 5.5 crore investors in mutual funds. So that's phenomenal growth. And we've seen people also trading equities as well. That number has been increasing. So the direction of travel is in the right direction. I think it still needs a lot more in terms of education, and reach is important. So not just mainstream education, but getting education into the far corners of the country. It's a very diverse country. That's important. And growing trust in the industry is very important, because again, this is people's money we're talking about here. So they need to trust that what they're putting it into is going to be a safe space for them. So there is a lot to be done in that respect to grow the market. But I also see the industry doing a lot of that. So, the industry bodies are really focused on this and doing a lot of great work. And we want to be a part of that and help grow that. We hope that, we can provide a unique lens to that as well, given that this is a joint venture between Jio and BlackRock as the international asset manager coming to India, can provide unique, differentiated perspectives. So we will try and use that angle a bit more. But I think overall, the trends are exactly what we like to see, and then we help grow that from here on.
There's so many things you've touched upon that I want to sort of pick on, but I'll pick on the differentiator that you spoke about. And Aladdin, the platform is really, it's causing curiosity, excitement even. How does that make BlackRock and sort of this venture different from any other AMC that's around?
So firstly, you think of it as a platform, and let's start with thinking about it from the view of an actual investor, as in a professional investor. So fund managers are actually managing the money. It's a huge enabler, right? And I have now worked for over 20 years. I've used Aladdin for over 15 and a half years myself, and I had 4.5 years when I was a different system, so I can't tell the difference. But the benefit for an actual portfolio manager or a dealer or a risk manager is that all of the information and the data related to securities, risk, analytics, portfolios themselves, it's all in one place, right? And internally, it is called, Aladdin is known as the language of portfolios, and that's how people refer to it. Because no matter which department you're in within an AMC, whether you're in the operations department, the risk department, the investments, dealing, reporting, you're all looking at the same data, and you're all speaking the same language. So that simplifies a lot in terms of things like operational risk. It reduces that.
Sure.
It allows the asset manager to innovate, firstly, with differentiated strategies, but also be able to innovate at scale. Because you can do all of the innovation in a very safe manner, because it's all contained within the system. And then you can build it up, because it's a technology that manages trillions of dollars globally already. So the platform can handle a tremendous amount of scale. Now, that's all great. That's how it benefits an asset manager, but let's also remember the customer. So how does it actually benefit the customer, right? So the ability to innovate and manufacture at scale also then allows an asset manager to pass on those benefits to the end customer. So first, one of the ways you can do that is through the pricing itself, right? So if you are able to generate things at scale, that means you can pass some of those scale benefits to the end customer. They're paying less for what they would at other places. So that's one benefit. Another is, and definitely the level of that will change over time in terms of how much of the analytics can actually be provided to the end customer. And we have to be careful here because clearly doing too much, you also don't want to overcomplicate things. So segments of the market, like the institutional segments, really like to see all of the analytics. They want full transparency, be able to slice and dice their portfolios in many ways. So Aladdin can provide reports that are much more dynamic to end customers in that space. Now, you probably don't want to overburden a typical retail customer with all of that information, but some high-level summaries that you can provide that are insightful would be enabled for end customers.
So talking about the end user and the retail investor, so say there's an investor who's picking your product from the MyJio platform and as low as 500 rupees, what will Aladdin mean for them? Are they going to have a different dashboard? Will there be a stress test? What does it look like for the investor?
Yeah, that's a great question. And I think we want to start simple, right? And if you actually look at the Jio Finance app, which is where we are right now, we have kept that as clean and as simple an interface as possible. So we want to make sure that the key informational pieces that you need about the funds are there. The ability to transact in the fund is as intuitive and easy as possible. Once you report, your dashboard actually right now looks very simple and straightforward in terms of what have you invested and where have you invested. Over time, we will build on those analytics. So we are still very much in testing and learning mode. So we're seeing what is resonating more with our audiences in terms of what analytics are they asking for, what are they looking more at, and we can build and develop and deliver more, right? So all of it is there. And the pace with which we kind of, let's say, expose that to the end customer will be managed over time, depending on what the need is and what the asks are.
Okay, so let's talk about an index fund, right? Now, you've already mentioned that from your AMC, the index fund may have a cheaper expense ratio. What else is better for the investor?
Yeah, absolutely. So expense ratio matters. Because for an index investor, there's two things that will matter, right? One is that how closely can you track an index? So you are investing in an index fund because you want the returns of that index.
But there
correct?
are so many funds doing that already.
Many doing that, but then you have to look at it post all of the costs, right? So for any index investor, so yes, tracking an index is important, but looking at all of the expenses and the costs that have incurred into that tracking is important, because that's ultimately the return that the investor gets. The index return is a benchmark. That's let's say a number on a piece of paper, but we need to actually deliver that as close to that number as possible, right? So tracking error expenses matter. Tracking difference also matters, and I will try and explain that a little bit, right? So this is ex post, like how things like transaction costs actually impact the returns, right? And that is very important. So the ability for us as an asset manager to leverage our platform to really look at, and we very, very proactively call it index funds, and we believe there's nothing passive about indexing, because we have to be very proactive about how to track indices. So looking at what are the biggest, let's say, event for an index fund is when the benchmark changes. So that's when all of the rebalancing happens. So when the rebalancing is happening, the fund manager needs to really be aware of what are the changes, what will be the potential impact of trading those changes, because when by impact, that's transaction costs. That again goes to returns. So over decades, BlackRock has developed the technology that really analyzes the impact of changes. We have the data in terms of liquidity and, let's say, estimated transaction costs for each security that the fund manager has available on their dashboard, that can then inform their decision on saying, okay, if I want to track this, what's the best way for me to track the change? Is it to do everything blindly at the close? Or are there some names where I need to be a bit more nuanced around my actual trading strategy and be as close to the close as possible so that I minimize on transaction costs? So that's the kind of, let's say, added advantage that the technology brings. that ultimately reduces transaction costs. So all of this
And
is about
eventually
reducing, because
affects, yeah.
we have to be conscious. The goal of the index fund manager is not to try and outperform the index. That's what active fund managers are here to do, but is to track the index but minimize transaction costs. And that's what we believe the platform enables us to do better.
Well, you articulated that very well. But let's talk about the active funds, right? Now,
Sure.
there is a culture where people are looking for that star CIO. What's your thought on that? Is that something that Jio BlackRock will, is that the strategy, that the path that you're taking, that there'll be star fund managers?
Yeah, look, we have a very, very strong, experienced team. So I don't want to make them look bad by not calling them star fund managers, but we won't, right? So I think that's a very important question. So our belief, whether it is active, whether it is index, and we're doing all of it, is that we really want to be leveraging on data, technology, and process to generate returns that are in line with the benchmark if it's an index fund, and above the benchmark if it's an active fund. And that is really the key value proposition and the secret sauce that we want to bring as Jio BlackRock, which means that we are much, much more reliant on our technology and our data. And we have the fund managers that work really well with the technology and the data and with the overall process that we've set up to then deliver the best outcomes for the client. So in short, no star fund managers, but the data and the process and the technology and the fund managers are the stars in totality. And that's what it's all about.
So a tech-forward, low-cost disruptor. Do you see yourself as that?
You could call it that. I think we have to look at it as differentiator, right? People use the word disruptor. I like to use differentiator because the market here, firstly, has a lot of competition. There's now 50 AMCs in the country. And a lot of them have been around for much, much longer than us. So when we look at the market and we say, okay, what is different that we can bring to this market that has a lot of very good performing asset managers? What strategies can we bring? The data-driven, technology-focused strategies are the ones where we believe we have the most edge. So hence, that's our differentiator.
Okay, well put. Now, we know that this is a business that's very tightly regulated. Regulations can change very quickly. It impacts the business. In fact, we've seen that happening in derivatives, in options. At Jio BlackRock, is that a path you're willing to take, where it's quant-based strategies, etc.? Would you be moving in that direction?
Yeah, so I think one of the benefits of also just starting up at this stage is that we are still very nimble, firstly. There's no legacy, let's say, book to worry about. And then having this data-driven technology-first approach also gives us a lot more flexibility. So I believe that we are a lot more nimble to changes. We actually look forward to some of these changes coming through because that's where innovation can happen as well. Yeah. So having set up a platform that is really, really designed and built for innovation, our ability to adapt to change, we believe is faster, stronger, and better. So we encourage the changes, and we really are looking forward to how can we continue to innovate. If there are changes, what else? How can we pivot? What do we need to do? That's always in our thinking. And look, and that's not a unique factor in India either. Like this happens globally around the world, and so people need to learn how to adapt and change. So that's kind of my take on it.
Now, one of the innovative products is the SIF that the SEBI has allowed AMCs to work around. Yeah. So is this part of the plan? You start with passive, move to active, and then specialized products like SIF funds?
Yes, in short. And I wouldn't just stop at the SIF, right? for us to deliver on our vision, which is to be an asset manager in the country that is serving the entire spectrum of investors in India with affordable, personalized, and innovative solutions, we need to look at all the wrappers that are available to the market. So yes, we have started with mutual funds. We've focused on our institutional cash and then index, and we're doing active next. But absolutely,
is there a
we're looking
timeline?
at not any fixed timeline, because we do have, let's say, our phase one, which we're in the middle of right now in the funds that we're launching. A lot of work is happening in parallel, looking at different wrappers, whether it's SIFs, whether it's ETFs. We're looking at those as well. And then over the next course of months and years, you will see us kind of action on each of these.
Okay.
So yeah.
Okay, so we look at hedge funds like Citadel and Jane Street globally, and they are making billions from trading strategies. In India, we've seen a huge interest in the derivative space as well. Do you see Jio BlackRock entering that space? And what's your take on the fact that derivatives turnover in India is actually now much higher than the cash market?
Yeah, so there's two parts to that. So firstly, I think my take is slightly different as an asset manager, right? Because that's a very much of a, let's say, a brokerage type of question in terms of the F&O market. From an asset management perspective, like, our usage obviously is much more limited, right, in terms of where the regulations are. You pointed out SIFs, that's going to be kind of the first foray into using some derivatives in our products. So it's limited but growing. I think the platform that we have definitely enables us to mix and match these strategies in whichever, let's say, weights that we want to deliver customized returns to our clients. So I think that is something that we are watching, and we will kind of adapt and grow as we need in that strategy. I think on your second comment on the overall kind of volumes and the size, yes, it's high. That's an observation that it is very high. I think a lot is being done and talked about as well, and I'm still, let's say, just entering those conversations, given we just launched, around the other side of it, which is actually growing the volumes on the equity side, the cash side, right? So how much more can we do on the cash side rather than just looking at it as, oh, well, there's too much in one. I think we also need to look at, like, how can we facilitate let's say, more nimble trading patterns on the cash side is something that we would look at, and I think along with the industry is something that we're all going to be looking at.
But the way derivatives are sort of dominating turnover, do you think that's a concern for market stability?
I think markets evolve, right? So there can be temporary concerns at certain points in time. Both investors themselves as well as regulators are all part of the same ecosystem. So my belief, at least, is that over time, and we have seen more and more of this over the last, I would say, decade and a half, where yes, there is a shock, and I'm not talking India, I'm not even talking globally, there is a shock in some segment of the market. But a combination of the regulators, the monetary authorities, and investors themselves, institutional as well as retail, were able to adapt and, let's say, find a new equilibrium very quickly. So if you see, like, the crashes, they're there, or there's a market, let's say, disturbance, and it corrects fairly quickly relative to historical averages. So I think there is a lot more nuance now in the overall market, in the checks and balances that are being put in place, how the regulators are viewing it, and then how the participants are participating. My view is that the new balance can be found much quicker.
Yeah, fair. And I think there's a lot of work being done to raise awareness around this area as well. Now, even before the JV, BlackRock had put in, I think, was managing about $100 billion of investments in India. Where were these investments, and what are the learnings from that time?
Yeah. So yes, absolutely. Over 100 billion. I think it's probably 120 now. I don't know the exact numbers because I've left BlackRock. I'm now Jio BlackRock. But yeah, I think predominantly, and if you look at the overall shape of the investments, is probably 70 odd % is index equities,
Okay.
because that is a very big part of the business. And then the rest is pretty evenly spread around different styles of active, fixed income, equities. So the rest of the mix is pretty even. And I think the learnings from there definitely are being incorporated to what we're doing with the JV. So firstly, how we approach indexing in India is something that we're bringing in some best practices from BlackRock into that, as well as then adapting it to the local market. And then the active side, where I talked about really approaching it with a data-driven, technology-driven approach versus a more traditional fundamental approach. Those were the two big learnings that we are now incorporating and bringing it into the JV.
Okay. Now, this JV has created a lot of excitement, but this model has sort of been tried before, because there was Idea and there was Aditya Birla Capital. What are the synergies right now between Jio and BlackRock that you're sort of treating as a foundation, like as a springboard, and how will this be different from what was tried before and didn't work?
Yeah, I think the combination of the two, yes, in terms of who they are and what they do is one thing, but ultimately it's all about the products themselves. They need to be differentiating. They need to have a value proposition for the segment of the market that they're meant for. So we are very, very laser focused on ensuring that each of the products that we are launching has a very clear value proposition for the segment of the market. So that's really important. And then right now, what we're looking at is, okay, how do we leverage the Jio ecosystem and the broader digital ecosystem? Because that's the other component here, where that is also growing in India, to really simplify access to our products. So designing the right products and then getting access, in a easy, quick, cheap, efficient manner is the key, we believe, right? So that is really what all of us in the joint venture are focused on, is how do we continue to innovate on the products, innovate on the distribution, to figure out the right mix. And I think getting that right is going to be the secret to success for the JV.
So in a sense, the customer is already there, right? The point is, how do you get them to invest with you? What is the approach you're taking to get that customer on board? Is it going to be investor education or any other strategies? What can you share with us?
Yeah, education is very important. So, what we've done so far, we've started with some of our initial content. It's just the beginning. Our app and our website has a lot of the educational pieces that we put up. We are really looking at right now, just being in the right place is the first important thing, right? Which means, and let me explain that, right? Which is within the Jio ecosystem, where there is a lot of natural traffic.
Yeah.
Then if you're in a place where there's natural traffic with the right message, that's one way to make sure that we are able to onboard customers through that. The second, I think, which is probably further, is as the ecosystem develops. So we are also, we're within MyJio, we are within the Jio Finance ecosystem. There's a lot of cross collaboration that is going to happen within that ecosystem. Because if you think about Jio Finance on its own, is where a lot of people will go to do their finances. So to have an investments option in there naturally brings a lot of cross collaboration. So that's the kind of the next phase that we'll be looking at, is how do we really make it easy for the end customer to do what they want to do with their finances all in one place. And the easier you make it, the more customers you're going to get.
Yeah, but you do know, and you mentioned the other asset management companies earlier, the top 5 actually control 60% of all AUM.
Yeah.
How are you going to change that?
So, firstly, the big, let's say, vision for us is to grow the market. I think that's the big picture view, which is that this market has the potential to be 2 to 3x in the next 5 years, right? So for us, it's really about helping to grow the market and then capture share of that growth. So that's how we see it. It's not about, necessarily about market share from existing players. It's about the new flow, and there is so much room for this market to grow. So we see there's plenty of space for us to kind of.
You're absolutely
drive.
right. I think there is room to grow. I think in India, the mutual fund penetration is under 17%. Globally, I think it's over 65%.
Yeah.
So when you say you want to broaden the market, grow the market, what are going to be the catalysts that are going to achieve that?
Yeah. So firstly, it's also at an industry level. So education is very important, and I think the industry bodies are doing a fantastic job of getting people more comfortable with the idea of investments. So with, let's say, more of a traditional savers mindset, how do you move people to an investments mindset? So that piece of education, which us, including everyone else in the system, will be focused on. We will try and bring our own lens to it as a global player. That is very, very important. Then getting it out to the diverse parts of the country is the second big piece. I think there is a lot that we can do. I think even with the digital ecosystem that we have, the penetration is so high across the country that there is a lot that we can do to actually get that message out to the people. Because I think once you educate and build trust, I think once those two things click, I think people are very comfortable then transacting on their phones. I think that's a behavior that is much more, I think, advanced here in India than the rest of the world.
Yeah.
But you need to do the first two things right. So the education and the trust needs to be built. And once you do that, then doing it digitally becomes very natural.
Okay, I'm going to ask a very simplified question.
Okay.
How will you build trust? You yourself said right now, once you are able to build trust, then people are very comfortable.
Yeah.
But how do you build trust? Because that is one of the key factors that keeps people away from investing and keeps their money in the bank.
Yeah. So trust has to be earned. So you can't just get it. And it takes time, right? So firstly, I think ensuring the fact that this is a new joint venture, a new company, but it's backed by two immense names. BlackRock, which again has been doing this for many, many decades, managing over 12 trillion globally. So the DNA of this company is one of expertise, scale, all of that, right? So we need to communicate that to our end customers. That's one piece. The second is the products themselves. So the products, how they deliver their value proposition in terms of whether it's an index fund, how closely we track their index at a competitive price point, minimizing transaction costs. All these things are important for an active fund. How consistently we're able to deliver outperformance. All of these will then continue to, let's say, act as boosters to building that trust. So I think there's multiple layers that we need to be looking at.
Yeah, absolutely. And sort of, going back to the products that you currently have in the market, you've launched your NFO in the cash and index segments. What opportunities lie ahead for equity investors? And could you elaborate on what the core investment philosophy at Jio BlackRock is?
Yeah. So I'll take that in order that you asked me. I think in terms of what's coming up ahead, we are the next fund that we're looking at is an active fund. So this will be a flexi cap fund, and really that will be looking to leverage a platform which has done really, really well at BlackRock. We call it Systematic Active Equity, or SAE for short. And it really brings to India, I believe, for the first time, really disciplined, data-driven investing in an active context. And we are bringing that with a combination of strategies, as well as the fund management team that we've hired. So it's not, when I say data-driven systematic, it's not black box. It's not just a machine doing everything. So we've hired an investments team that is really proficient in this style of investing to deliver consistent alpha to clients. So that's going to be the next fund itself that we're going to be looking at it. And there's many more iterations just from that, let's say, family of investing that we can bring to the market, that we will bring to the market. Yeah. In terms of the philosophy, right, and I think that's a even, let's say, more important core question for me, right? So I truly believe like I said, data-driven, systematic investing is the way to, let's say, deliver consistent returns over the long run. But more than that, asset allocation is very, let's say, close to my heart. Right? I think that's um, a philosophy or an understanding that I think we need to build more of in India, right? And I think we're just again scratching the surface from that perspective. We reference some of that even with our index fund launch. So one of the reasons why we launched 5 index funds in the same time was because we believe that those 5 funds are true building blocks that you need and an individual needs to build a overall asset allocation for themselves. Now they may choose to do it themselves, they might choose to go to an advisor, but those are some core building blocks. So starting to think about asset allocation with regards to people's, whether it's regards to people's goals, where they are in life, what their risk appetite is, all of that will evolve, and there's many elements of the joint venture that will be addressing those aspects as well. But as an investment philosophy, I think that's really important for us to continue to kind of build that education around how important asset allocation is to investors, rather than just picking the one fund or the one stock, which could do well, but in the long run, asset allocation is what's really going to be driving returns.
Oh, good to know. And I think the FlexiCap fund you mentioned sounds very promising, and you think it fits in very well for a digital first platform like Jio.
Yeah, so there's a few use cases for that. I think one of the reasons why we believe it fits well into any investor base in India is that it's very differentiated from the existing category, funds in the existing category, right? So from a pure diversification perspective, it will perform very differently to others. So I think that's a benefit. So if people already have, let's say, a large FlexiCap allocation, allocating the next piece to this fund would be a diversifier, which will help the overall return. So that's one way of looking at it.
Explain that for us, please.
So I think to get into that piece a bit more, if you, let's say, get into too many concentrated holdings, the risk there is that, yes, they may all perform really well at the same time, but they can also all underperform at the same time. So building diversification helps, because then you are able to buffer some of that underperformance. So if you have portfolios or funds that behave differently to what you already have, then that's a really, really positive diversifier to the overall asset allocation. I'm going to go back to my favorite word. So I think that's one, let's say, angle for how this fund is very differentiated. The other one is the fact that it's a very, and I will still use some technical terms here, benchmark aware FlexiCap fund. So, so you know what you're getting. So you're getting the FlexiCap benchmark and you're getting alpha on top of that benchmark. Yeah. So in terms of our digital audience that do a bit of their own research, like to do their own reading and do their own investments, that's a really easy concept to understand, to say, okay, I know what the FlexiCap benchmark does, and this fund is looking to outperform that on a consistent basis by X amount over a period of time. So I think those two concepts are probably what I would look at as the differentiating factor from a investor perspective, because that's what matters. Like, there's a lot that is differentiating from an asset manager perspective, because we're using all this data, new technology, we're using Aladdin. But from an investor perspective, it's the returns and the behavior of those returns. So it's not just about returns, it's when do they go up and when do they go down. That matters a lot. And that's what is going to be different in the fund.
Okay, thanks for explaining that. Now, if we look at global investments into India, they're sort of, global capital is at record highs in India. China, we see slowing down. From BlackRock's global vantage point, what is this picture looking like to you? And what are there factors that could derail this?
The JV has been formed is a very, very strong indicator of how bullish BlackRock is on India, right? And also, you would have seen in the news that BlackRock also has been increasing their own presence in India through their own company as well. So that's kind of the India view. There's always going to be risks, but we see these as short-term risks. right? So anything that, we've seen a few blips around the tariffs, valuations always come up as a risk. I still see these as short-term risks. Over the long run, with the very strong macro story that India has in terms of growth, productivity, demographics, combined with the micro story of investor participation, domestic participation increasing from a very low base, the long-term view is very, very positive. And I think that's what we're here to, let's say, help facilitate, but also for our own growth. It's super critical.
And, if we envision that your growth in India is strong, do you see Jio BlackRock going beyond just funds and sort of becoming this investing ecosystem? Tools like, or maybe even partnerships with insurance or pensions? Or are you going to stay focused on funds?
We already have announced a wealth management company as well that will be coming online soon. And we've also announced a brokerage that will be coming online soon. So we are already looking at it as a much more holistic ecosystem of offerings. And the objective here is to provide affordable, accessible investment solutions that are personalized to more and more people of India. So that's how the entire joint venture is structured.
Okay, so we've spoken about how you manage trillions of dollars globally, but at Jio BlackRock, say 5 years down the line, what will success look like for you? Or how do you imagine? What will you certify as success?
Yeah, I have been asked this question before, and I think at this stage, we are still taking it step by step, right? So there is, to your point, a high-level 5-year vision of the market will grow. We are here to facilitate the growth in the market, and we want to be capturing a significant share of the new growth to make sure that we are one of the larger, let's say, players in the industry. That's kind of the big picture vision. But really, in terms of how we look at our targets, we are taking it on a step-by-step basis because, and the reason is we're doing a lot of new things on the edges, right? So this active strategy that I talked about, that's fairly new. Right now, we're really looking at leveraging the digital distribution directly. We're learning a lot. So every time we do an NFO, we get new information on how our clients are interacting with us and how we see potentially strategy evolving for the next NFO and the next phase of products. So I think once we go through, I would say phase 1, which would be probably towards the end of the year, we would have developed our learning and understanding of the ecosystem to have a much more, okay, here's the, let's say, the target that I want to be setting in X years' time. But right now we're much more on a learn and evolve mode.
Thank you so much, Sid, for joining us on Thrive by Groww. I think it's been wonderful to learn about how you're thinking about growing not just Jio BlackRock, but also you're reimagining how India will perhaps invest in the next decade and more. Thank you so much for joining us.
Thank you for having me. Look forward to chatting again soon.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.